The bond vigilantes are not the only players in the bond market, but in Japan, they clearly are having a tremendous influence in pushing up bond yields significantly in protest of irresponsible fiscal and monetary policies. You've basically had the government pushing for more stimulus, for more fiscal stimulus, and trying to get the central bank not to raise interest rates when they clearly have an inflation problem because inflation is 3% and not 2%. The central bank is in a real dilemma because if the central bank continues to raise rates, the central bank could cause a recession. So it's a tough situation for the central bank, but the bond market basically is taken over and saying, well, if the central bank isn't going to continue to raise rates because of pressure from the government, then the bond vigilantes will do it.
So Takaichi, Prime Minister, has called for snap elections, running now on a platform of stimulus to drive a return to inflation as well as growth. If we look to the BOJ, is it a case if you're damned if you do and you're damned if you don't?
Absolutely, absolutely. They really are sort of in a bind here. Either way, they lose if they ignore the pressure from the government and maybe from the public that voted for this kind of policy on the fiscal side. They could cause a recession and get a lot of blame for that. On the other hand, if they do nothing, that inflation might pick up and bond yields will do the job anyways. I mean, really, if I was a Japanese central banker, I'd say, okay, I'm just going to do nothing and let the bond market do all the heavy lifting here so I don't have to take the political heat.
So if there was any indication of toning down the fiscal stimulus plans from time to time, ever since Takaichi has taken office October the 21st, there has been suggestions or discussions about a potential Liz Truss moment.
Sure.
Are we anywhere near that?
I don't think so. I don't see that there's really the political will to accommodate the bond vigilantes, as evidenced by the snap election ID, that the government wants to have even more support for their fiscal stimulus. That's not going to play well with the bond market.
Can you talk to us about the yen as we look at it slide near 160? Where do you see the currency?
Well, I think that the weakness reflects the ambiguity of fiscal and monetary policies. In some ways, it's as though the Japanese government and central bank are driving a car, and at the same time that they're trying to press on the accelerator with fiscal policy, the government is trying to push back so that the BOJ doesn't tighten monetary policy. So having a loose fiscal and monetary policy is not a good way to run an economy. And so the bond vigilantes feel like they've got to slam on the brakes. And I think that's being reflected in lack of confidence in the yen. But at some point here, the rising bond yields might force the turn around the yen back to the upside. But at this point, I think it's really going to be a question of whether the BOJ is going to demonstrate that notwithstanding political pressure, they're going to do what they have to do to fight inflation. And so if they surprise everybody by raising rates, the yen would obviously strengthen in that kind of scenario. And then, of course, there's the unknown of the yen carry trade and how that all plays out and all this volatile action. I think about a year ago, we had a test of that notion, and it turned out that it didn't really cause the financial calamity that people anticipated. My bottom line is I don't think this is going to turn out to be a Lehman moment situation. I don't think Japan's problems are going to go global the way America's problems in 2008 went global.